Welcome to another market update video. Ever since the Trump administration announced 100% tariff for branded and patented pharmaceutical products entering America, pharma has been the new buzzword for the Indian stock market. Today, however, investor sentiment in the pharma sector has been a bit better. Why? Because a majority of the drugs exported from India to America are generic drugs, and generic drugs are exempt from this 100% tariff. So investors believe this 100% tariff will not really affect the Indian pharmaceutical sector as much. Especially today, the Sun Pharma stock has opened in the green, mainly because, like I've mentioned, a majority of its bulk export to America is generic drugs. Also, Sun Pharma also has a bit of manufacturing and operation set up in America. And if you guys remember, the Trump administration made it clear that if you have manufacturing or operation set up in America, you will be exempt from the 100% tariff. Another important thing to remember is this 100% tariff is not for countries that have signed a trade deal prior to this within this sector and with America in general, countries such as Japan and the EU. So these are some things that you have to keep in mind as an investor. Another important thing, which is very important, is that the banking sector is opened much more optimistically today. The main reason is because of the positive outlook expected by the government for fiscal year 26 with respect to its fiscal deficit. So this has played positively on investor sentiment. Now the IT sector, prior to the H-1B visa announcement, was doing well. Then the H-1B visa announcement came, which said that 100,000 fees for anyone who wanted to get a new H-1B visa. That affected the IT sector and the investor sentiment within that particular sector. But today it has seen a bit more of optimistic investor sentiment. And one of the main reasons behind this is because of the American data, which has recently revealed that the personal consumption expenditure, which is basically the consumption report and inflation report of the American market, it's looked positive and inflation remains stable within the American sector. This, investors believe, will play out positively on the banking and IT sector, which has once again resulted in positive investor sentiment. Another thing to remember is the most important announcement, I would believe, in the last 2 days, which is China has reduced all of its import duty for Indian pharmaceutical products entering into China. Prior to this, it was 30%, but now there is no pharmaceutical import duty. However, investors believe this will not really have a positive economic impact because as it is, prior to this import duty cut, our pharmaceutical drug export to China was very minimal. So we do not know how this will play out. But if there's one thing that we can say for sure, it's that in today's geopolitical climate, a new reform, a new announcement, a new trade development is happening on a daily basis. So every day there is something that's influencing the market. So even to make a 1 week prediction or a 2 week prediction on how the markets will play out is very difficult. Will the markets remain in the green zone? Will they drop? The short term looks very volatile, purely because of the geopolitical and national climate. However, we can say that in the long term, in the next 5, 10 or 15-year period, the Indian markets do look solid. Of course, it does not look that way temporarily because of the geopolitical uncertainties and the trade relationship between India and major countries such as America and things of that nature. However, in the long term, we believe things like these will be sorted out and the long-term returns will look good. So what should you do as an investor? Rule number 1, follow and keep a keen eye on all of these geopolitical unfoldings because it's these geopolitical unfoldings that have an impact on your portfolio. Number 2, don't rush to make a decision. Don't be distracted by the noise. If you see a news that could potentially influence the market, wait and try doing your research and try understanding. Rule number 3, consult an advisor. When the market looks very volatile, it's easy to make quick judgments which could not go in your favor. It's always better to seek out a professional investment advisor who will help you figure things out and give you a clear perspective on things. Last but not the least, this is a good entry point, provided you make the right intelligent investment decisions. Why is this a good entry point? Because the markets have still not really picked up. They're still not doing tremendously well in terms of their upward rally. There's still more of a rally to be expected in the coming months ahead. Because of this, what we personally believe is if you could get into the markets now, you could make good, handsome returns if you're in it for the long run. Use this time, get into the markets, use this entry point, but make sure you stay wise, don't pay attention to the noise, and make sure your investment aligns with your long-term goals. Get into the markets, make the right intelligent decision, seek professional advice, and make use of this entry point. Thank you.